All right, back again. It's your boy. You already know who it is. It's your boy B Bill. We about to go over the trade ideas for 9/8. Let's get into it. All right, so let's just go ahead and start from the top. Let's remove that because we only like trading perpetuals. So all we do is we trade those perpetual contracts. Yeah. All right, let's just remove the drawings and start over, as I often like to do. All right, let's do that, and we can just open it back up, right, and click through. All right, so we're gonna go to the daily again. Let's go and check it out. Like I think as we said before, well, let's just new outlook. So we have this last move down. I mean, obviously, this just looks overall bearish. We could potentially see a turn in the next direction or in the other direction where we'd probably want to see it come back up to here. So we probably want to see it come into this area, this supply, right? Last up move for the down move, and this last up move before the down move, and it's just an unmitigated zone, right? You can see here if we look at this candlestick, right? It pushed up, it opened, right? It pushed up and then it fell off and it never came back. All these other areas, right? Like right in here was mitigated here, right? It pushed down, came back into this area, then pushed down. And on the daily, that's the last unmitigated zone. Now, let's go and look over here. We saw it pushed all the way down here, right? Fell all the way down there. And it looks like it pushed back up about 50% into this last big black candle, the BBC, right? And then it just fell off. But it looks like we're starting to try and make some upward momentum or some upward pressure. So let's go ahead and zoom in a little bit. So let's go to the 4 hour, check it out. All right. Looks like we could again, if we look here, we can make this case, right? Push down here, came up and then broke below again. So we could on the 4 hour make the case that this is an NB. And then we could say, well, did it come and break this area? And it did on the 4 hour. Where did this come from? Came from down here. Where down here? Well, that's arguable because we could say up here, but I mean, we already saw this got liquidated. Break, yeah, it came from in here somewhere. So you could make some arguments here, right? When this broke, you could say, okay, well, we had this last move right here, right? And then this broke, and you could say, where did that come from? You could argue, okay, well, it came from here or it came from here. Let's argue that it came from here. Then again, all right, we got 6 a.m. We got the New York Open. Well, 6 a.m. where I'm at, 8 a.m. pre-market technically, right? But we saw this break. So we could say this was an unmitigated zone on the 4 hour. Let's go ahead and pull that over. And as we see, it would be similar to our previous day's analysis. Looks like we're coming in here again. So came up, right? Let's go ahead and just mark these out because just so we have an idea and we can see what's going on. Right there, right, break, and we said right here. So where did this come from? We want to see that broken or this broken. But then alas, we see that broken again and it's whipped. We don't really have a full body close, but I actually do count wick breaks as a break of structure. So we see these breaks, right? And we can see Wyckoff was actually forming here. So high, what is this? I haven't done my Wyckoff in a minute. I just know it's highs, breaking highs, breaking highs. But let's go and let's learn something real quick. Again, I haven't looked at this in a minute, but we're gonna look at it again because it's something interesting to learn. It's definitely something interesting to learn, and it's how I learned. I'll give a shout out here to my mentor, MintFX. Dude is a great trader, been trading since he was 11. So this man really knows what he's talking about. And when I joined his mentorship, you can see a lot of his trades in there. So Richard D. Wyckoff. Who's Richard D. Wyckoff? 1873 to 1934. He had a theory. He had a 5-step approach to the market, and he had the composite man, or what we call the banks, or manipulation, all the stuff people talk about, liquidating lows so that they can get into their positions, right? All this craziness that people talk about on the internet. We just MintFX simplified it. We got the MintFX blocks for the MBs, and that's what I'm saying MB. So as you can see here, we have the accumulation, and then we have let's go down to the distribution, right? So we have two schematics, and so right here we have preliminary support, and then we have the buying climax, then we have the automatic rally, secondary test, sign of weakness, right? Then we have an up thrust, right? Then, right, we have it just playing around. Then we have an up thrust or UTAD, which is up thrust after the distribution. So it redistributes, right? Boom, boom, boom. But it's very interesting, right? Because it breaks here. But as you can see, the common pattern here is highs right here, this buying climax, liquidating highs right here, right? This up thrust, liquidating highs, UTAD, right? Or up thrust after distribution, right? And then it breaks, test, right? And then last point of supply. Then we have another sign of weakness, and then we just fall off, right? So you can see highs, liquidating highs, right? Breakdown, breaker structure over here. And then this would be our MB2 right here. And then you would sell stop this LPSY all the way down. Does that make sense? Hopefully it does. And so that's the first schematic, right? Then you have the second schematic, which looks a little different. And how it was explained to me was this is a snowflake rule, meaning obviously snowflakes all look different. So it's just the general idea here, right? That sometimes you're going to have that UTAD, sometimes you're not. And this UTAD is usually the spring, right? So you can go up here and then you can say the accumulation, and it's just the distribution flipped. And that's what we're looking for. We're looking for structure. Let's go back to our trading view here. We're looking for structure, right? And, well, what's going to denote the structure? Well, these MBs, or these squares here. So these are structural points that I'm seeing on these time frames, right? So break, right? This structural point breaks up, right? Structural point. Then when I see a break, I'm looking for an unmitigated zone, meaning price never came back to that area, right? So in this case, when you look at this 4 hour, right? Let's go ahead and circle it right here. Whoops. You can see we had a doji, or what people call a doji, but price opened, it came down, right? And then it just took off, never came back and mitigated that area. So this is the last down move before the up move, unmitigated. And so we would consider that a demand zone at that point. And so we're waiting for price to come back and tap into this demand zone. And when it taps into this demand zone, so we're starting to see here, then what we want to look for is a Wyckoff-ian accumulation. Now, we know in trading, most people have talked about the market is fractal. The market is fractal. But how fractal is it? right? Because what people will tell you is, oh, I only look at the 4 hour. Oh, I only look at the hour. Oh, the 5 minute is noise, right? So if the market's fractal, why is a 5 minute noise? It must not be noise if it's fractal. And you can find these patterns consistently showing up across all time frames. So that's how I tend to trade. And so, anyways, we see it coming to this 4 hour, but as you can see, this is a very large area. And you can kind of start to see it forming here. Yeah, Wyckoff. Boom. So could make an argument that this might be a schematic 2, automatic rally, secondary test. Well, this is selling climax, right? Sign of strength, ST and B, or secondary test in phase B, right? Then spring, then we see all this, and then we see the break finally right here, right? This is a break of structure. Let's go ahead and make it a bit more clear right there, right? So then what we're looking for, well, we're looking for it to come back into this large MB or structural point. Then you might say, okay, well, once that breaks, wouldn't you want to look for it in the demand zone that's formed in here somewhere, right? So we could say this looks like a area that never. Ooh, well, that's an interesting new hotkey, right? So it never technically comes back down into it. And I think this is where back testing and experience really comes in, where you can start to see the markets the way that you see them, in my opinion, because you can get all types of strategy, but until you test over and over, like I'm doing right now, putting out these videos to track my particular trading patterns, you won't get a feel for how you actually trade. So as you can see, it finally broke. Where did it come from? Down here somewhere, right? So we could say, okay, well, we want to see it come back down into here. But again, we never see it come back down in here, and it just keeps breaking and it takes off. So in this case, I probably would have done some type of risk entry, right? Because I see it break and I'm like, it's pulling back. So in my mind, I'm like, okay, NB1, and then I'm like, all right, NB2. Am I willing to take this risk? Because before I would have assessed, if I was looking at this at the time, and I would have said, does this make sense to where I want it to go? Which obviously is to new highs. I wanted to see it run all the way up here. So does that make sense? Yeah, 1 to 9, perfect. I can get a 1 to 4 out of this. So then I would actually took the trade. So that's just how I look at the markets. So anyways, markets are fractal. That's what we talked about. Talked about a little bit of Wyckoff, and we talked about structure, supply and demand, and confirmation. So some of these are risky, some of them are not, right? But that's the risk that you take when you actually enter into trades, right? And that's the big part about the psychology of trading is you need to accept the risk. You need to accept the risk, right? You can't, once you take the trade, okay, you can take analysis after and say, okay, well, I could have done this different. I could have done that different. But at the end of the day, what you need to do is accept the risk wholeheartedly and don't blame anything but, the poor analysis that you possibly did, or maybe that was just an entry part of your strategy, and accept that it's just, you're not always going to win. That's the nature of the market. So anyways, that's enough of me rambling. Let's go ahead and move to, well, let's see here. What do we got going on here? So let's go up to the 15. All right, we see a break here. On the 15, we see a break here. Right, so we technically say we want to see it. Let's go ahead. All right, we saw a break. So for sure, I'd say that I consider that an MB. Great, we saw a break here. So then I guess what I would want to see is I want to see it come down somewhere into here. So I want to see it come down in here somewhere to mitigate. You see this break, you see another break up, right? This is kind of questionable, but it looks like it could be something potentially. So then I would go ahead and say buy zone there because I'm really expecting this. This is hot right now, really hot. The coin seems like it's really steaming up right now. So then I go down here and see what do we got here. So we have this large push up, right? Let me make this desk higher real quick. So we had a large move to the upside, boom, came back, technically came into here, boom, came up. Yeah, I'd want to see it. If I was going to take a trade on this, I'd definitely just wait to see if it comes to the zone. So what I'm going to do is I'm just going to go ahead and set an alert. Let me get my alert set. All I'm doing is copy and pasting from a notepad on my computer, y'all. Don't worry about it because we out here doing the things that we do make us winners over time. If we consistently do those things, then we're just permanently winners, right? All right, so we're going to wait for an alert to see if it comes back down to this area. I mean, I guess technically, what do we have? Let's check the time. Let's see here. Do we have 4 a.m. New York Stock Exchange pre-open? Limit order auction at 4 a.m. Eastern. Opening auction, market order auction. So yeah, 9:30 a.m. Eastern. So we still do have some time for MISC to open up. Because let's see, yeah, we have about an hour and a half, so we got some time. But in the foreign exchange markets, Forex is actually open. So let's go to Euro, see what the Euro's doing, and let's go ahead and remove all the drawings and see what we got going on here. Let's go to the daily again, start from the top and work our way through. All right, great. So we see this here. Great. We're going to go ahead and refine that down to here. I like this better. I like that whole area right there on the daily. So what we want to see is we want to see something like this. We want to see it start to come up and then fall off. All right, let's go down to the 4 hour. All right, let's look here. What do we got? We got this push up, got this break. I like this on the 4 hour. Have another break here. Right, that would have been NB2 to sell stop, which is great. All right, what do we got? We got a lot of choppy price action in here, y'all. So let's go ahead and fell off, came back, higher low, lower high, lower low, lower high, lower low, higher high. So now higher low to go higher. So let's, cool. So what we want to see is we want to see it come back here. I'm going to see it come back here before going up here, right? And it looks like even on the higher time frames, we have a pretty big chunk, but nice. Look at all that meat. Look at all that. A lot to chew on there. So let's just drop down. Break. Got to break up. That's a pretty large zone. But we still have a pretty sizable area to trade. Looks like it's breaking. I think this is going to turn into a distribution to come lower. This is the 1 hour, by the way. I think we have some room to still come back down. We have a break up. All right, on 30-minute. Let's see what else is going on. All right, we had a breakdown. We had a break up. Could actually debate on a lower time frame that we could be seeing price go up. Let's go 5. We got some big moves coming in, some heavy movers in the market, right? So this is what I'm looking at right here, y'all. So I'm looking at this. It came down and it broke, came up right here, broke down. We see something like this. But again, this is where structure, S&D, supply and demand, right? And then confirmation come into play. So let's go down to the 1 minute because we're 1 minute master. Let's go here. Ooh, man, that is a large move. But we'll just go ahead and set an alert. See what happens when it comes into here. And the key is patience, y'all, because we are expecting it to go higher, to go meet the higher price before ultimately going lower. And we want to keep that in mind at all times when we're trading. We want to know what the higher is doing, just so we have a story that we're telling ourselves. And the story is important. The story is very important. All right. Great. So, man, this screen is crazy. All right. So we'll just leave it like that. We'll say we're waiting for this to come and tap into there, and we'll wait, see if we get a confirmation. Look at that move. Oh my goodness. All right. So it's 1 day. Before I completely obliterate this chart, let me go ahead and put this for my own analysis later, so that I can just put in the probability of what's my average risk reward, right? Because you want to be tracking this as well. You want to say, hey, what are the average that I'm getting from these particular trades, right? So that you can go back and you can say, well, can I take more, right? Can I take more out of this trade? I think that's pretty important here, because you want to know the way with your style of trading, what's the optimal amount of risk reward you get, right? So are you a 1 to 3? Are you 1 to 2? Are you 1 to 1 even? Or excuse me, are you even a 1 to 1? Right? You want to know these things. And so you want to save that analysis. So this is what I'm doing, y'all. I'm saving that analysis. Let me show you here. Making plays on TradingView, right? So all I did was I just went into my Discord and I went here. I saw this is where it actually won. And so then I said, okay, well, it actually ran here. And let's go bring up TradingView real quick. And this is a 12.96. And over time, I'm going to continuously improve this. What I want to do is add some artificial intelligence, right? Because I have all of this data that I've collected, right? You can look at just all types of information here, trades, wins, losses, in between. There's a lot of data in here. I think this goes back to like April, maybe even March. But yeah, you can see there's just a lot of information in here. Some where my bot actually didn't work correctly, which there's some bugs in it still. There are definitely some bugs, but I'm working that out over this year. And there we go. We got the alert. Let's go down. Let's see what we get in here, so you can see real time what happens. Alert was hit. Let's see how long it takes for it to put the screenshot in here. There we go. And as you can see, this might be a real time for us. Let's go to our Discord. Let's go to our TradingView. Yeah, boy, we in the TradingView mine. All right, that's cool. All right, so we're in this zone. But to be honest with you, I want to see it come and run this low again, because this isn't really looking very solid. You can see if we're going to make a case for a trade, right? So we saw this, boom, broke, retest, and then it broke down. So theoretically, if we were to look for a trade, we want to see it break that first before coming in retesting to go higher. And that's the only reason. Let me open up my trading or my brokerage so I can get ready just in case, just in case, there might be a trade coming up. We like to be prepared. And what I do is I risk 0.25 risk, a quarter of a percent risk on all of my trades. So if I'm trading 100 grand, then I'm only trading 250 on that, as opposed to the 1 grand that you'd expect from most people. Recommend between 1 and 3% per trade. I do 0.25 at this point because pretty cautious trader. And if you get those 1 to 4s, then you just have more bullets to shoot at the end of the day, right? When you do 1 to 1 and you're thinking about 100% of your capital, you only have 100 bullets to shoot. But if you do, right, you do 0.25, then you have 4 times that, so you have 400 bullets to shoot. So I like having 400 bullets to shoot, because then if I have a low win rate, but then I actually have 1 to 4s, 1 to 5s that I'm looking to hit every time, then it ultimately balances out over time. So here we go. Are we going to do crackhead trading right now? We might have to. So 1 second time frame trading. Let's go. Ooh, man. Potentially, right? If we're looking at the 1 second, and this is the tick chart. I do not recommend most people do this, right? You will probably get stung a lot if you don't consistently practice this. So let's see here. See what we're going to do. All right. See this break? You have that right there. See what happens. Nope. See breakdown. Right? When I say breakdown, right? What am I talking about? I'm talking about this right here. Boom. And it broke below that structural point. Theoretically, since we are looking for that, we could say something like this. But look at that. No meat on that bone. And honestly, this looks like it's just redistributing, right? Because highs, breaking highs, and then breaking highs. But we'll see. Let's go up. See what's going on here. Let's see what's going on here, y'all. Are we going to see the play? I don't think we'll see the play. So let's go ahead and get out of this super low time frame stuff, right? Let's just not get so crackhead trader-ish. So what we want to see this break before we start looking for a trade. Like let's be a little tame here. So we're gonna go ahead and put an alert, and we're gonna leave it at that. And this is where I recommend, this is where patience becomes a thing. When you start getting down to those lower time frames, you really start, maybe not for everyone, but I'd say for most people, you start getting anxious. I'd say for probably just about everyone, there are a few special people in this world who can handle that type of pressure and it moving so fast. But I'd say I wait for this break of structure, and then I wait for something like this, right? I want to see something like that before I consider taking a trade. So we'll just go ahead and as you see, it's coming down now. But let's go to NASDAQ and see what we got. So let's go to 1 day. We'll just let our alerts do it for us, right? So we're going to move everything here. What do we got on the NASDAQ? All right, we got the break. right? You see this break, broke this structure here. So we got this NB here. And we saw that, we saw a break right here. Or excuse me, when it broke this structure, we had this right here, right? Then we saw a break down, but now we saw a break up one more time. So where's it coming to? That's the real question. So on the daily, I like this area right here, right? Came down, pushed up. It opened, came down, pushed up, never came back. So we could see some potential mitigation coming into here. Let's go down to the 4 hour. I mean, it just came down so fast. So fast. And I don't think this is holding it up. So I want to see it. I want to see it come down to here. Let's go ahead and put an alert here. All right. On the 4 hour. But again, we're going to go ahead and scan, continue to scan. All right, you see the 1 hour. What is it doing now? Because we already know we want to see it come down in here, right? But what is it doing now? So we see this break here. We see it starting to break back up, right? But when we saw this break, we could potentially see it come to this last unmitigated zone before ultimately dropping off. So I'd like to see it come in here before taking a short. All right, let's go ahead and put that alert there. Great. That's what I would like to see ultimately, right? Because I'm thinking first it'll come down here first. All right, we just had an extremely bullish day yesterday. Come down here, right? Come and mitigate up here, come down and take off again. So let's go down to 30, see what we got going on. Have the break above. I think we can still come up there. We did have a breakdown. Came up, break. I'm still looking for one more break here. I'll look for a break. But I mean, ultimately, we do want to see it just come up into this structural point.